On everybody, happy Friday. It is time for another portfolio update where I'll go into this income slash dividend producing portfolio and go over the holdings, the performance, some of the funds, and some future plans for this portfolio. Quick story behind this. If you're new here, I'm a former real estate investor, got out of real estate investing and into these income producing ETFs and investments in the stock market. um, my only wish is that I would have discovered these sooner because these are a game changer, and I'm going to go over some of the reasons why and how they've been performing for me. But really, the number one thing I'll say about them is that they give you options and freedom because every month or a couple times a month, you are getting essentially what is a paycheck. And what I do is reinvest those profits back into the same or diversified assets. I'll take some income or a dividend from one fund and I might reinvest it into another fund. Year to date for my portfolio, we are actually beating the S&P 500 by close to 3%. It changes, with some of the different timelines here, right? But year to date, 2.78% ahead of the S&P 500, and a large portion of that is thanks to those dividends, right? So we'll jump into some of the holdings. The general premise behind this portfolio is I want it to be diversified and I want it to be sustainable with consistent dividends that I can choose to spend or reinvest as I choose. Now, some of these funds, like for example HYLD, which essentially is like an S&P 500, I choose these types of funds because, guys, you can see these dividends very sustainable, very predictable, but they're also increasing. They're increasing over time, right? And that is something that I look for. A 12% dividend yield, that's pretty, sustainable, I would say, for covered call ETFs nowadays. That's actually almost on the lower side, believe it or not. And then you've got ones like HDIV. This is another one that I love. And you can see it came out in September of 2021. And if you actually look, the dividends have only gone one way only, and that is up. They've only increased. So just to summarize, like I said, everything here is diversified. A lot of these track the indexes, USCL and HYLD. These funds track the S&P 500 index. HHIS is more concentrated. It's got a lot of crypto and technology kind of stuff in it, but a lot of these stocks that are inside of it also are in things like the NASDAQ index. So I like to think most of these holdings have what you could consider to be blue chip stocks. Large cap, there's nothing really speculative. I mean, I do have Bitcoin, some Bitcoin exposure, but I mean, even the Bitcoin stuff, guys, Bitcoin is, it's not like a small, crappy crypto coin. It's really what look for here is large cap and blue chip stocks. I don't want anything speculative. I've got mostly American or North American stuff. Canoe EIT, it's a mix of Canadian and American. Same with HDIV, right? Everything else I would say is, like I said, index based or technology kind of centered. C-Day is one of my newer holdings, and I like this because it's got the blue chip Canadian dividend stocks, but it's also got the zero DTE on the S&P 500. Very unique fund, which pays twice a month. So, in summary, I'm up like price wise. If I wanted to sell everything, I'm up on price on everything I own. Again, the plan is not to sell, the plan is just to buy and hold and collect those monthly dividends, which we'll check out right now. So, per month, we are over 6,400. September, pretty much everything's been paid. It came out to just shy of 6,300. I'm waiting on a payment from C-Day. Again, this pays twice a month, so I've already been paid once from them, 211. Next payment is 229. And then for October, we are just a little bit higher with C-Day now going to be 240. Again, I'm kind of pushing a lot of the income I'm getting into C-Day. So like when I've been getting my monthly dividends, I'll allocate them into the funds that I want. And right now I'm trying to build C-Day up. So C-Day actually As far as a percentage of my portfolio, I've got it up to about 6%, and I want it, at least 10% of my portfolio. So that's my current goal. Besides that goal, I've also got a passive income of $80,000, which I do want to achieve, which is achievable in 2026. I'm 96% of the way there. Like I said, guys, I'm kind of reinvesting everything at this point. I think in the next month or two, I may start to spend some dividends, but I will never. My plan is to never spend more than half. I always want to reinvest at least half, which I feel like is a good kind of trade-off for these income funds. Everything I'm holding, it doesn't fluctuate. It's not like crazy yields. I really feel that like 12 to 15% is a good yield to be at, but I don't know. I mean, the yields keep getting higher and higher. Even HHIS I thought was really high, being sitting right now at about 22.5%. But just recently there's this new one from Evolve Biggie, which is coming in at almost 30%. So, I'm not sure where this ends, but maybe 12% is considered low now. But even at 12%, I feel like that's hit a good target for me for what I want a sustainable distribution at. HYLD, USCL, HDIV, etc. So, like I said, yeah, everything here is diversified or index based. We've got some concentration with HHIS, some concentration with ENCC in Canadian oil and gas, and HTAE in kind of a concentrated technology fund, which, I do like HTAE because it does have that natural growth of the dividends, but at the same time, I have thought about trading it off for HHIS because there is a little bit of overlap in some of the companies inside. As well, it's still a harvest fund, which I am a fan of harvest. I really do like the way that they pay out their dividends, and they seem very, very responsible for the way that they handle their investments. But guys, overall, I'm very happy with this portfolio, all of the holdings. Every month the income's very consistent and it's consistently been growing. So at this point, it's well surpassed my day job income, and that's a great feeling as well. Like I said, my only wish is that I discovered this style of investing sooner, or got out of real estate a little bit sooner and into this to let it build up, right? But this is the portfolio, guys. It has been going just as good as I wanted it to, maybe even better. Currently sitting at about 14% yield. But if we check the yield, yeah, my yield on cost is almost 15%. So again, those natural dividend increases will increase your yield on cost, which is also a nice bonus. $77,000 in passive income per year from approximately $550,000 portfolio, about 14%. Let me know your thoughts in the comments down below. I am thinking of making some changes to this portfolio next year, but if I did, I think I'd be losing Canoe EIT just because Canoe is now sitting at dividend yield of 7.69%. So we're under 8%. Really, I don't want anything under 10%, but I mean, the share price is just shooting up, which is making the yield drop down. I thought if I sold Canoe, I could get into some more HHIS, maybe some more HYLD. Again, though, guys, I've also been thinking about Biggie. I think I'm going to think about this a little bit more. Let some more dividends get paid out before I jump into it, but it's very, very enticing. Biggie. Let me know your guys' thoughts on Biggie down below. Maybe I'll try to do a bit more of a dive into Biggie on another video if anyone's interested. It just hasn't been out very long yet. I hope everybody has a great weekend. I hope you like this video, and I'll catch you guys on the next one.